Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy any investment based solely on a tip or recommendation. Please do your own research.
Hello and welcome to the Midweek Takeaway. Today we're joined by Pieter Krugel, CEO of Mast Energy Developments. Welcome back, Peter.
Thank you, Phil. Thank you, Kevin.
Absolutely, yeah. I mean, it's been a good 4 or 5 months since you've last been on the podcast. And then we talked about entering into a strategic funding partnership with RiverFort Global Opportunities, securing an initial facility of up to £4 million to develop and construct a 300 megawatt portfolio of flexible power assets. Since then, we've seen a few business updates regarding drawdowns, but the latest update announced the completion of the second phase refurbishment of the first genset at the Pyebridge site is now operational and generating revenue. This refurbishment, supported by RiverFort funding, is expected to boost site revenues and gross profit. MED plans to overhaul the second genset soon. Additionally, MED is in advanced discussions for acquiring a 10 megawatt flexible power generation site in southwestern England to achieve lower investment costs and quicker revenue generation. Tell us more, Peter, please.
Thank you, Phil, and happy to do so. And as you say, it's been a while. It's been a few months since we last spoke, but the main reason for that is we've been extremely busy, not only turning around the business, but moving forward, growing, making progress. And that's what we've been doing. And that all started with the new funding agreement with RiverFort, which we concluded and announced at the end of February. So that followed a fairly painful period for Mast, with the default on the planned JVA investments, which was unfortunate and completely unexpected and out of our control. But, with the new funding facility with RiverFort, we managed to turn around the business and, sort out Pyebridge and start looking at other opportunities as well. So at this stage, the main progress was on Pyebridge itself. As you said, we started off with some initial repair works during March and April to achieve SPDs, satisfactory performance days. That's in terms of our capacity market contract on this site, which is a significant portion of our income from the site. We successfully completed that within timeline and budget. So that was the first step. Following that, we initiated the second phase of the work program, which involved the refurbishment of each of the 3 gensets on the site. We've just successfully completed the overhaul of the first genset. If anybody is interested, we've created a nice little sub-page on the Mast website, which, gives a full overview of the overall story, each main step in the process, what we did, photos, what it looks like, which gives a very good overview of what it involved and what we did. So that's been successfully completed within timeline, within budget. That genset is now running commercially, so that's been a big step forward. And that establishes a proven blueprint for us, not only to move forward with the refurbishment of the other 2 gensets on Pyebridge, but also to use on some of our other sites in order to reduce capex, but also timeline to commercial operations.
Okay, so RiverFort are effectively partnering with you for Pyebridge at this moment in time. Everything else, no.
No. The mandate is open. So our full business, all the sites, they are supportive. So Pyebridge, yes, we've pressed play, and that's going very well. So as and when we take a next step, we'll be supportive.
But as of now, the cash is purely at the asset level for Pyebridge, yes?
Yes, that's
yes. Okay, so you're currently 426 million shares in issue, market cap of £500,000. You have a main market listing, which in itself should be worth more than £500,000. But what I really want to break down is what revenues can you expect from Pyebridge as we move forward? So tell me specifically the revenues that you're going to get from these T1, T4 contracts, and then obviously the electrical generation itself. Maybe when one of these things is working, when 2 of these things are up and working, and 3 of these things, just so people can see what sort of cash flows are going to be coming into the business. So first of all, how much is the T1 contract, which the government gives you, worth to Pyebridge?
Yes, thank you, Kevin. I'm happy to do that. Just before we get to the revenue side of things, I think it's worth looking at the asset value, the intrinsic asset value of specifically Pyebridge. and just kind of comparing that to MED's market cap at the moment. So, I mean, the asset value, the sum of the parts of the physical assets of Pyebridge at the moment, and that will be predominantly the genset, but also the balance of plant, the transformers, etc. And obviously the land that we own there, it's a freehold property that we own outright. I mean, all of that is at least £4 million in total. I mean, and comparing that to MED's market cap at the moment just doesn't make sense at all. And that's excluding MED's other projects. So I think there's a very big discrepancy there. And you know, there's reasons for that. And the difficulties of the past, well, you know, obviously played a role. But, you know, we've started to turn things around. We are making progress. Yeah. We will move forward and we will, you know, hopefully close that gap. And I mean, that's an opportunity for investors.
Yes. You died and came back to life, Peter, and I don't mean that in a negative way. I mean that in a positive way. The reality was that the market believed you were out of business, and then RiverFort and yourselves have resurrected that, and now you're in a much stronger position than you were probably even a year ago, before, you know, the original JVs were even talking about doing it. Okay, you've probably had to give up some of Pyebridge, but in the other JV, you were giving up even more of Pyebridge than you are now. So, you know, in some ways, this is possibly a better deal, but as you say, everyone's got a bit spooked by the whole, this could all go out of business. We're now at the situation. So yeah, so a net asset value of 8 million, even with the debts that are going to be there from RiverFort, still means you probably have an overall net asset value of probably £5 to £6 million as we speak. And then obviously that may be slightly reduced on one behalf because you're going to be taking more money to fix the other two gensets. But at the same time, that's going to increase its asset value, surely, because of its production. So it should be a net situation. So let's move on to the revenue so people can see how this can work and therefore pay back all of this debt and then subsequently move on to the next asset that you want to buy and the next asset you want to buy and the next asset. Because I still believe, even though it was, 3 years ago now, this 300 megawatt scenario still required, I presume, in the market. There isn't any less need for this, isn't it?
Yes, I mean, exactly. And I mean, I think even more so today. You know, flexible generation and the capacity market is an integral part of the UK energy mix. And as renewables grow, which is great, and as we move toward net zero, whether that's, you know, whenever that the new government's target for that's going to be, and they're talking about 2030 again, you know, the capacity market is going to become even more important. So the latest numbers that we've seen is the capacity market generates roughly 8% of the UK energy mix at the moment, and that's expected to almost double to around 15% by 2040. So there's a big scope for increase in demand, and then obviously also supply of generation from the likes of MED. So getting back to the revenue side of things, to answer your question there, so maybe just as a quick reminder of the revenue side of things of these sites. So we've got two main revenue contracts for a site. The one is the capacity market contract with the UK government. That comes at a fixed tariff, pound per kilowatt annum for the site, following an auction application and bid process with the UK government. And that is either a fixed 1-year contract or long-term 15-year contract, depending on the type of contract that you've applied. So on Pyebridge, we've got 4 capacity market contracts at the moment for 4 delivery years. We're in the third one at the moment, and we've got contracts up until 2028. There's one missing in the middle, the 2025-2026 delivery year contract, which we plan to apply for in the next auction. The application window for that starts in September this year. The auction for that is March next year. So we expect to get that. And then we've got the capacity markets in place up until the end of 2028, and we'll keep on doing that. You know, we'll keep on applying for capacity markets as we go on, you know, to supplement the income, because it's a significant portion of the income. So, I mean, if you look at the contract that we have at the moment, that's £308,000 of gross profit income per annum, and that's guaranteed. It's a contractual fixed income guaranteed by the government, and that's paid and guaranteed annually. So that's on the capacity side of things. And then on
are you getting 25,600 per month now?
That's correct, yes.
roughly. Okay. What's the difference between T1 and T4? Can you just explain that?
So the T stands for time. So it's almost like share trading. So just the time until delivery. So T minus one means in the year that you get awarded the contract, it's 1 year until the delivery date. So usually you start applying for a contract in September of a year, let's call it this year, 2024. And then a T1 contract, the delivery date for that will start in October, the 1st of October in the following year, so 1 year later. And a T1 contract is typically for a maximum of 1 year, fixed 1 year. The T minus 4 contract is 4 years after the application date, so it's the 1st of October, 4 years later. And that is typically a 15-year contract from that point onward.
Okay, so it makes sense to have differences, different types of contracts depending on the way that the electricity price may change, or you think it's better in this case when these finish that you will apply for T15 and it's set.
I think both scenarios has got its advantages and disadvantages. The main advantage of the long-term contract is you've got surety of income, regardless of the tariff. But the potential disadvantage of that is as the energy market evolves, and especially if there's any further energy crises due to whatever the reasons, and we've seen that in the past few years, if the capacity market contract tariffs jumps dramatically. Typically, previously, it's been around the £30 per kilowatt annum level. In the past few years, we've seen that jump up to 60. It might come down again. So it's almost like, are you going to follow an averaging out strategy and just keep on applying for 1 year contracts? And at the end of the day, you'll get an average tariff, or just go for the surety of the 15-year contract. And the plan is to apply both strategies across our sites. Like some sites will have the full 15-year contracts and the surety of the income, and some of our sites will try and capture the upside with applying for 1 year contracts going forward. And the idea is to maximize income from that combination.
Okay, so this 25,600 per month that comes into the site, does that cover most of the costs on the site, or even all of the costs on the site? The fixed costs.
Yes, it covers all the fixed costs. So the fixed cost of the site is roughly £10 per megawatt per annum. So for Pyebridge, that's roughly £90,000 per annum. So it fully covers all the fixed costs on the site.
Okay, so based on that, then, even if you don't produce any electricity, does that cover the running costs of Mast itself as well, the topco, if you like?
So regarding the topco, I think the corporate costs, and I'm not talking about non-recurring costs or impairments. I'm just talking about, bare bones or mainly listing costs. Mainly
listing costs, salaries, etc.
Yes, yeah. So that's around £600,000 per annum, which is fairly lean for a listed company, especially nowadays with increasing costs, etc., compliance. Yeah.
Peter, moving on then, the potential then for each one of these engines, how much? I mean, you can't give us an exact figure, obviously, because it's dependent on the price of the gas and the price of the electricity that you can make. How much is Pyebridge likely to produce when all three are working? I saw Statkraft, you were talking about negotiating a minimum amount of electricity that you're going to give to them at a £50 per megawatt, I think it was. So first question is, how much would that get you? Okay. And then how much is the potential, even at that rate, with all three engines working as you hope, being beneficially used? Or if that makes sense, answer that question. If it doesn't, don't.
No, absolutely, Kevin. So the plan and intention is, as we've announced, is to add a floor component to our power purchase agreements with Statkraft, which guarantees a gross profit income to the site, very much like the capacity market contract. So regardless of generation, regardless of demand, we are guaranteed that income per annum. So it is one of the benefits of Statkraft. They're one of the few providers that actually offer that for facility to the PPA. It is backed by Statkraft balance sheet and very good credit rating. They're a Norwegian state-owned company and backed by the Norwegian government. So they've got a sterling balance sheet and credit rating. So that floor facility is backed by Statkraft. So we're guaranteed receive that income. And at the moment, we're looking at around £50 per megawatt annum for Pyebridge. It could potentially be higher, and it may very well be. It all depends on a few elements. But if we look at that, let's call it the base case, it would mean that from the PPA, we will get £405,000 per annum gross profit from the PPA. And then, just looking at the current capacity market contract, that's £308,000. So that's over £700,000 of gross profit from the site, guaranteed.
Okay, so based on what you've said, those two things alone would cover all of the topco costs and give you Pyebridge costs, as in the site costs. Okay. Now, how much then potentially could the three new engines, I presume, producing more efficiently? I saw in the RNS that there was specifications put in those blocks so that they can't burn out as easily, or et cetera, et cetera. So how much are we talking about potentially can Pyebridge generate on an annual basis? Because this comes to the crux of it. If this isn't possible, there's no way RiverFort would have lent you £4 million in the first place, as far as I'm concerned.
But that's absolutely right, Kevin. That's true. So just before I get to that question, just quickly back to the previous point regarding the gross profit, the total gross profit. So that's naturally before debt, before any debt obligations. So this funding facility with RiverFort, just quickly an overview or a reminder of the key terms of that, and this is tailored for Pyebridge specifically. When RiverFort joins us on the next project, the terms might not be exactly the same. I think the idea is as we grow the portfolio and as they keep on supporting us, I think the terms will become a bit more favorable because obviously as part of this first deal with them, a part of that was to, help turn MED around. So, and then obviously there's a cost to that. So, but, going forward, we will review the terms and see what we can do. But at the moment for Pyebridge, we've got the facility there. So we've drawn around 1.2 million net from the facility. The terms of the facility is that if we draw in excess of $1 million, RiverFort has the right to convert that into equity in the project SPV. So not at PLC level, in the project SPV, which gives them a 50% economic benefit in the site. So if and when they do that, 50% of the profits will be theirs, and the remaining 50% will be Mast's. And up until that point, it's a straightforward loan. So if they don't convert, we'll just repay that facility from the profits of the site until it's fully repaid. So if and when the debt either gets converted or repaid, from that point onward, obviously the gross profits will be Mast's. I just wanted to clarify that to.
Yeah. Sure. And they can only do this to a maximum of £2 million, I think, from what I read as well. Yes.
So there's levels of conversion, but yes, if they put in the first million, that triggers the right for them to convert, and if they put up until the second million, there's a certain other threshold. But at the moment, if they've put in more than $1 million, they can convert up to 50%.
Okay, so let's go back to the revenue of Pyebridge. What is the overall potential for Pyebridge? We don't want a blue sky figure, just what do we think on a normal basis based on current megawatt prices could we receive from Pyebridge?
So the expectation is that once each genset is overhauled, that genset, so there's two main elements to a genset. There's the efficiency, and that basically means that each therm of gas coming in generates a certain corresponding unit of electricity. And typical reciprocal gas engines efficiency is around 38%, give or take. One of the main reasons why we use Jenbacher gas turbines, it is one of the most efficient gas turbines available on the market. So we expect that the efficiency of the gensets post-overhaul will increase significantly, between 15 and 20%. So that's on the efficiency side of things. And then also on the other side, the very important element is availability and reliability. Once we've overhauled the engine clock gets reset back to zero, and it is an as-new engine. So it means that the availability and the reliability of the engine is guaranteed at 95%. We've previously, with the engines being in an older condition with a very high clock, that wasn't the case at all. So we also expect a significant increase in that element of at least 20%. So if we come back to the PPA and our expected gross profit, and specifically looking at the floor with Statkraft, as we could potentially increase that floor from £50 per kilowatt annum to 60 or 70 pounds per kilowatt annum, which will correspondingly increase the gross profit from that. So base case, we're expecting £700,000 of gross profit from the site, and post overhaul of all the gensets, that could go up to 800 or 900,000 pounds, depending on the floor facility that we ultimately negotiate with Statkraft, which, one of the requirements from their side is that the engines, there's certain warranted technical operational parameters that they require, which we will be able to do once the gensets have been overhauled.
Okay, and is there a situation there where that could be significantly more? We know it couldn't be significantly less if we put the floor component in, but is there a scenario where it could be significantly more, either because there is much more power required, or alternatively the megawatt price goes up significantly? I mean, how could that work?
So the main elements that affect our site's income generation is, on the one hand, demand, but that is fairly well managed by National Grid. We don't expect any major spikes in there. Usually we see that when there's a big sporting event, let's say the UK hosted the Olympics, that would result in a big energy demand spike. So we don't expect that. But where we do expect volatility and increases in prices is energy instability. So, I mean, we've seen that with the Ukraine crisis, etc. So that might happen again, and that might increase prices. That's why, in 2022, I think energy companies across the board recorded record revenues and profits, because of that extreme volatility. But at the moment, I mean, that's subsided, luckily, for everybody. So at the moment, things are fairly stable, and it all depends on what happens in the market and politics, geopolitics globally going forward.
I think whether you like it or not, the demand for electricity capacity is there, as you alluded to. I think I saw that the auction for the 27-28 hit a record high price of £65 per kilowatt per year. I think with gas plants receiving about 67% of the 43.4 gigawatt capacity. But I just wanted to ask you regarding obviously sort of current news, how do you anticipate the new Labour government will affect business? Obviously already we've seen Labour remove the de facto ban on new offshore wind farms in England. And we've also seen Statkraft sign a 10-year power purchase and optimization agreement with FP Lux Group for its 81 megawatt Scurf Dyke solar in Yorkshire. Do you see any changes afoot with Labour affecting business at all, Pieter?
That's a very good question, Phil. And for us, that is good news. So Labour seems to put a very big focus on green energy developments, kind of bringing back the net zero target closer to 2030. And because our business model and our assets are supplementary to renewables, meaning that, if the wind doesn't blow and the sun doesn't shine, we come on stream, we get called upon. That is why the capacity market is an integral part, an inherent part of the UK energy mix. That's good news for us. So the more wind, the more solar that gets built. And, when we get to net zero, hopefully sooner rather than later, that's excellent news for us, because the capacity market is such an important part of the mix.
And I guess another question is, would you ever look towards maybe looking at solar solutions and maybe, onshore as part of Mast's growing business?
Absolutely, Phil. That's a very good question. And although we don't have any firm plans at the moment, it is something we are certainly looking at. And one of the main reasons is because it's supplemental, because there's a direct link between the two. And that'll be a great diversification for Mast shareholders as well, is because there will always be some kind of generation and some kind of income. So if the wind blows, you'll get it from the wind asset. If the wind doesn't blow, if it's a pure wind company, you're not making income. But with us, if we have that diversification, or whether it's solar, you know, kind of 24/7, something will be generating money.
We're surely not talking about the sun shining in the United Kingdom here, are we?
We've had our 2 weeks of sun. We've had our 2 weeks, haven't we, Peter?
Surely this is a step too far even for you guys.
No, but unfortunately not in the UK.
Yes, indeed. Okay, so let's move on, shall we, to the other things, because I think we've safely secured the future of Mast MED through Pyebridge. Now that it is what it is, you have a secure business, you have revenues that are going to be coming in. Granted, the bottom floor component won't be in place for maybe another 3 to 6 months once the other things have been set up. But ultimately, I presume you're probably getting that sort of income anyway, as and when those come in over the next 3 to 6 months. So it's not a case of that income is not coming in. So now we're going to look at the future, which was always the, looking ahead, saying, how do we, first of all, use the 25 to 30 megawatts that are already in the stable, and how do we go forward with the rest? On the RNSs that I was reading, the other sites are all now sort of ready to go into the stage where you will fit them out, so that they can be used. So yeah, give us some feedback on that and update if you wouldn't mind.
Outside of Pyebridge, Kevin, and as you said, that's been the first step, and that's been going very well. And I think that's sorted out. So for us, there's 2 focus areas. Immediate future, that's our existing sites, all of which are construction ready. They're compliant, they're in good standing, and they're shovel ready, subject to capex funding. And that is what we're looking at the moment. So we are in discussions with various funding partners on both the debt and the equity side to make sure that we get the right mix and the right funding partners into those projects. Due to the high inflation the past few years, the capex per megawatt, have increased. But we've solved that problem now with what we did at Pyebridge. So we've got a blueprint, to reduce capex cost, which we will apply on all our sites. So that solved that problem. Subject to capex funding, those sites are ready to go. Simultaneously, we are looking at potential transactions to further grow the portfolio, and specifically sites that's already been constructed, kind of similar to Pyebridge. We have identified such potential asset and transaction, which we are in advanced discussions on, which we recently announced the outlay of. And the idea of that is not to replace our existing sites for the development and construction, but to supplement it. If we can acquire an asset that's already been constructed, that's either in production or very close to production for the right price, we can increase Mast's megawatts in productions and associated income much quicker. So we need to take the right steps at the right time in order to grow the portfolio.
So is it fair to say that RiverFort have been useful in terms of being able to have those conversations regarding financing over the last while?
RiverFort has been instrumental in MED's not only recovery, but progress up to now. So, we're receiving support from them, not only purely from a financial perspective regarding the funding facility at Pyebridge, but they're also supporting the business at a wider scale, advisory, legal, kind of putting their full complement of capacity and expertise, in support of Mast. So if we look at any transactional side, we've got that benefit to pull on. And the main reason for that is the fact that they do support Mast, not only on Pyebridge, but as I said earlier in the discussion, the business as a whole, and they would very much like to see MED grow and be a part of that.
Yeah, that's good. So where do we go from here? If I was to give you a magic wand and say you were let's say 18 months, so let's say the end of 2025, where would you hope to be in terms of, the structure of Mast, the number of megawatts in production, all of that type of thing? Because we've obviously had these discussions before in the past and they didn't come to fruition. But I feel now that, this is a new dawn and we should be moving towards some stuff. So what's your perspective?
Given the plan and intention is to, Pyebridge is sorted now, so that's a step forward. So that's 9 megawatts in production. We need to get the rest of MED sites constructed, which will bring the total megawatts around 30 megawatts constructed in production, and then complement that with further acquisitions of I think preferably sites that's already been constructed to save on investment cost and timeline to income generation, and double that. So I think, over the next 18 months to get MED's current portfolio into production, which is 30 megawatts, and then double that with new acquisitions and get it up to 60 by the end of 2025.
Do you think that's realistic, or is this very optimistic?
I think it's realistic in the sense that, the first 30 megawatts we already have in-house, subject to capex funding. And then the additional 30 megawatts to double that, we're already in talks for the first 10 megawatts. And if and when that gets completed, it's a case of, 2 further such transactions or one bit bigger transaction to get it to the 30 plus the 30 is 60. So I think it is realistic. Obviously, it depends on a few variables, but ultimately, that's what our focus is, and that's what we're working toward. And I think with RiverFort support and support from our shareholders, I think that's achievable.
So, do you think that any purchase is likely to be fairly significant in the size of megawatts that you're talking about?
The sites typically range from between 5 and 10 megawatts. So, I mean, the potential transaction that we're looking at, that's a 10 megawatt site. So, I mean, it'll be the cost for that, whatever that ends up being. It'll be significantly less than a brand new build, not only from a cost perspective, but also from a timeline to income generation perspective. So, we're not talking massive numbers, but it's also not cheap change.
Okay, great. We look forward to keeping in touch with you now over the next few months and see where this all ends up. But I think we're on the right track now, so good luck.
Thank you, Kevin.
No, we'll say Pieter Krugel, CEO of Mast Energy Developments. Thanks very much for your time.
Thank you, Phil. Appreciate it. And looking forward to updating the market with some further positive news going forward.
This podcast was brought to you by Roast PR Limited. If you would like to appear on a future episode of The Sunday Roast, please email admin@thesundayroast.net.